The Dow Jones Industrial Average paring most of its losses here on this Wednesday. I'm joined now on the floor of the New York Stock Exchange by Kenny Polcari of O'Neill Securities. Kenny, we're down 140 points in the Dow compared to about 480 at the open.
Actually, right. And it felt like even earlier than that, it felt like it was really going to be a disastrous day today based on the headlines that came out very early this morning, right, from China and kind of the imposition of these retaliatory tariffs. And so it created some angst this morning. What I think is very interesting was just before the opening, we heard from Trump, we heard from Wilbur Ross, we heard from Larry Kudlow, all very significant, kind of important people, certainly Ross and Kudlow of late, trying to calm the markets, telling people not to overreact. It wasn't what everyone was making it out to be, and people should not read into it. And so right away, actually, right after the market wasn't sure, it opened lower. It really jammed them on the opening to see. The buyers were there to defend it. The sellers backed right off, and we actually had a little bit of a rally going on. So I think they succeeded in kind of calming people down, but yet the issue is still out there. This issue is not over by any stretch, and we're going to hear more about it as the day goes on.
And Larry Kudlow said this is a growth action, but obviously the market potentially thinks otherwise.
Well, investors are really expressing their displeasure with just the thought of getting into a trade war, right? They're not necessarily saying that it doesn't need to be renegotiated. They just don't want it to be a war, right? They'd rather it be a negotiation and let everybody come out kind of feeling unscathed, except what it felt like this morning was it went from dispute to war, and I think that's what gets people kind of a little bit anxious.
But come on, I mean, you could argue that this is a gift for investors, the declines we saw, because if the S&P 500 ends the year at 3,000, where a lot of the strategists were expecting it to go, that would be a nice 20% gain.
Of course it was. What happens if it ends at 2,000? It's going to work the other way, right? And so that's always the issue, right? Which way is it going to go? And so that's why there's always buyers and sellers. Some people have one view, other people have another. Ultimately, I actually think that in the end it will be positive, because I do think these trade deals that we have that were written years ago need to be renegotiated, right? The world is a different place. The same way systems are modernized and exchanges are modernized and trading is modernized, trade negotiations need to be modernized. And so therefore I'm not necessarily sure that he's wrong. I think he's got a very brash way of dealing with it, right? But we've seen this before with Trump. This is not the first rodeo. We see the way that he presents an issue, kind of confrontational, gets everybody stirred up, and then he brings people to the table. And so ultimately, we're hopeful. I think the market is expressing hope that that's the way this is going to end up.
All right, and then buying opportunities, sectors that you're looking at?
Well, you have to look at the sectors that have gotten really beaten up as a result of this. I mean, look, we've had a tech wreck for sure, but that makes sense because those are the growth names. Those are the names that have been carrying the market for the last 5 or 6 or 7 years. They've got huge gains in them, and so when people get nervous, they're going to take money out of the big performers first. And so therefore, take a look at tech. Take a look at some of the names that got wrecked, 10, 15, 20% over the last couple of days, and really take a look at why they got wrecked. Now listen, some of them are very specific. Right? Facebook's got a very specific issue, nothing to do with trade dispute, but a very specific issue. So maybe that's one you give a little bit more time to play out. But other names that have gotten beaten up are names that you should, good solid names that do disrupt the economy, but yet provide a real service, are names that you should look at. I also like financials, I also like energy names, and so therefore there's a lot of opportunity created as a result.
All right, and then 24 hours ago, right here on this floor, Spotify debuted as a public company.
Yes, it did.
Stock is down 6% now, but it was quite a successful IPO. That's a healthy market indicator.
It actually was, considering all the turmoil the market is in. That really went off without a flash yesterday. They took their time. Morgan was the lead advisor. Was very, very methodical. The specialists down here on the floor, the brokers down here on the floor, all representing the interest at the point of sale, taking our time, trying to arrive at the right price, trying to make it all work. And in fact, it came off without a hitch. It opened higher than kind of what the reference price was, and churned and kind of sold off a little bit during the day. But that's just the market. That's not necessarily anyone's fault at all. And so a lot of it now, the trading today will really be reflective of kind of what's going on in the broader market.
But we need to see these big box IPOs in order to get the broader stock market higher.
Well, I think that's right. You need to see the IPO market come back to life. Now this, don't forget, don't refer to this when it was an IPO, because in fact it was a DO, right? It was a direct offering, separate from an IPO, the way that it works, right? The book was built directly here yesterday morning. And an IPO, the book is built prior to the stock actually coming listed. So the process is a little bit different, but the fact that we pulled this off yesterday, the fact that Spotify pulled it off, the fact that Morgan Stanley and the other underwriters kind of pulled it off, and the fact that the floor of the New York Stock Exchange and the special system pulled it off is all a testament to the strength of the organization and the strength of the market.
All right, Kenny Polcari, as always, thank you for joining us.
You're very welcome.